Welcome back to Debt-Free Dreams, where we break down complex financial topics to help you achieve financial independence. Today, we're tackling a critical concept every crypto investor must understand. Market capitalization, or simply market cap. What is it? Why does it matter? And how can it guide your investment decisions in the world of cryptocurrency? Stick around, because by the end of this video, you'll have a crystal clear understanding of market cap and how to use it to make smarter investments. Look in the description below for links to the helpful tools I mentioned. Part 1. What is market cap? Let's start with the basics. Definition. Market cap refers to the total value of a cryptocurrency in circulation. It's calculated by multiplying the current price of a coin by its circulating supply. Formula. Market cap equals current price x circulating supply. Why it's important? Market cap helps investors compare the size and relative value of different cryptocurrencies. It provides insights into the growth potential, risk, and stability of a crypto project. Categories of market cap. Large cap cryptos. Market cap over $10 billion, for example. Bitcoin, Ethereum. Typically less volatile and considered safer investments. Mid cap cryptos. Market cap between $1 billion and $10 billion. Offer higher growth potential but with moderate risk. Small cap cryptos. Market cap below $1 billion. Highly volatile, but can deliver explosive returns. Part 2. 3 reasons why market cap matters. Market cap provides key insights for investors. 1. Indicator of stability. Large AP cryptos like Bitcoin and Ethereum are less likely to experience sudden price crashes, making them safer for beginners. Growth potential. Small cap cryptos have room to grow but come with higher risks. 2. Risk assessment. Market cap helps you gauge the risk level of an investment. A smaller market cap often means higher volatility and susceptibility to market manipulation. 3. Comparison across cryptos. Market cap is a better metric for comparing cryptocurrencies than price alone. For example, a 1-cent coin with a massive circulating supply could have a larger market cap than a $100 coin with a smaller supply. Part 3. How to analyze market cap. Here's how you can effectively analyze market cap. 1. Use tools like CoinStats and Glassnode. CoinStats, great for tracking market cap, price, and historical data for thousands of coins. Glassnode, advanced analytics platform offering on-chain data to evaluate market cap trends. 2. Compare market caps. Use market cap to compare coins within the same sector, such as Layer 1 blockchains or DeFi tokens. 3. Look for undervalued projects. A project with a relatively low market cap but strong fundamentals may be undervalued, presenting an opportunity for growth. Part 4. Market cap versus fully diluted valuation. Understanding fully diluted valuation. Fully diluted valuation calculates market cap assuming all tokens in the supply are in circulation. Formula. Fully diluted valuation equals current price x total supply. Why it matters. Fully diluted valuation highlights potential inflationary pressure as more tokens are released. Always compare a project's current market cap to its FDV to assess long-term sustainability. Part 5. 3 common mistakes investors make with market cap. 1. Focusing only on price. Price alone doesn't tell the whole story. A low-priced coin can have a high market cap and limited growth potential. 2. Ignoring circulating supply. Always consider how many tokens are in circulation versus the total supply. 3. Overlooking liquidity. Even a high market cap coin can suffer from low liquidity, leading to price manipulation. Part 6. How to use market cap in your investment strategy. 1. Diversify across market cap tiers. Include a mix of large cap, mid cap, and small cap coins to balance risk and reward. 2. Assess growth potential. Look for coins with a market cap significantly smaller than competitors in the same niche, indicating room for growth. 3. Monitor market trends. Use tools like TradingView to analyze price and market cap trends over time. 4. Keep an eye on emerging sectors. Sectors like DeFi, NFTs, and Layer 2 solutions often feature small and mid-cap coins with high potential. Part 7. Tax and portfolio management. Managing your crypto portfolio effectively requires organization, especially when it comes to taxes. 1. Track your investments. Tools like Zen Ledger and Coinly can help you keep tabs on your portfolio and calculate taxes. 2. Understand tax implications. Profits from large cap investments are typically taxed as capital gains, while smaller, riskier investments may involve higher transaction volumes and short-term gains. Now that you understand the importance of market cap, you're equipped to make smarter investment decisions in the crypto space. Take advantage of tools like CoinStats, Glassnode, and TradingView to track and analyze your investments. If you found this video helpful, look in the description below for links to the helpful tools I mentioned. Please hit that like button, subscribe to Debt-Free Dreams, and share this with your friends. Let me know in the comments, what's your favorite large cap, mid cap, or small cap crypto project?